Welcome back. We are now hearing that this cycle may be different than previous cycles with $1 million Bitcoin price predictions and also predictions about Ethereum becoming the world reserve currency, among many other topics we're going to be discussing in today's video, including Solana treasury companies, Polygon, Internet Computer, Ethereum, Bitcoin, and much, much more. We have a lot to talk about. There's a lot happening in the markets and a lot to kind of take in on what we should be doing because a lot of people are, I guess, seem to be missing the fact that the fear and greed index is now moving more into the greed section. And like we've talked about, when we are in extreme greed, this is the sell point. When we are in extreme fear, this is the buy point. But on the way there, that's the journey, right? And we spend more time outside of these extreme levels and we stay kind of in the middle. But when you start to see the shift moving closer and closer to extreme greed, this could indicate that we are going to top out in the market. But there are a lot of people, including Bitcoin maximalists like Samson Mao, who believes that, yeah, we may have gradual moves, but when we go to $1 million Bitcoin, it's going to be a very sharp, short, and violent upheaval into these price moves. So let's kind of discuss this in today's video. As always, don't forget to give this video a free thumbs up. Also hit the subscribe button. That way you never miss a new video. We upload every single day of the year to bring you the latest happening in the financial world. Sometimes we do deep dives into individual cryptocurrencies. And sometimes we talk about the macro environment like what we're doing in today's video. And we're going to be talking about individual cryptos as well. Like I said, Solana, Ethereum, Polygon, ICP, Bitcoin, and much, much more. So let's get right into it. So as you guys know, Samson Mao has been talking about what he calls the Omega candle, which is moves on the Bitcoin price in the tens of thousands of dollars at one point, right? One candle, a $10,000 candle. And we haven't really seen that just yet. We've seen kind of more of a gradual move to the upside, but he believes that we are approaching this point where when we do hit 1 million, it's going to be very quick, fast, and it's going to happen soon. He believes potentially in a matter of weeks to months. Let's listen to what he said, and then let's kind of discuss and see where we are in the cycle, because there's a lot of people saying, Cryptoviser, this cycle is different, even though I personally believe that we are approaching the final stages of the bull market in the second half of 2025. So let's listen to what Samson Mao says about this.
Of fiat currencies, they don't gradually fail. They fail spectacularly. And this is the premise behind the 1 million Bitcoin call, that it's not going to be a gradual, slow increase to $1 million a coin, but rather a very short and violent upheaval that sends us there in a matter of months, weeks to months. And if you look at the hyper-Bitcoinization landscape, what you do see is more and more countries coming out and mining Bitcoin. Bhutan, I think, is the clearest example of this. They have close to $1 trillion now in Bitcoin holdings from mining over the past 4 to 5 years.
Hold on a second. He just said $1 trillion. Let me replay that.
Mining over the past 4 to 5 years. So, example of this, they have close to $1 trillion now in Bitcoin holdings from.
That cannot possibly be, because the entire Bitcoin market cap is $2.3 trillion. So he's saying they have half. I'm guessing he meant $1 billion. And it is true. Bhutan has been mining Bitcoin kind of low key for years at this point. And what we just saw recently on this channel is we discussed that there were some movements of Bhutan's Bitcoin holdings, I think to Binance crypto exchange. And so there was concern that they were selling. I wasn't concerned. I was like, obviously, we're at all-time record highs. If they've been mining Bitcoin under $20,000 over the last few years, clearly that's a pretty good point to kind of take some of that money out, cash out, start putting it to work in other areas, maybe buying more businesses or buying more property or developing their land, whatever they're going to do with the money. I mean, this idea that nobody's going to take profits, nobody's going to, sell Bitcoin. This is ridiculous. It is going on, obviously. Otherwise, we would already be at $1 million with all the buying that's going on. But these big companies and countries, they're taking some profits out because they understand the cycle of these markets. Samson understands the cycles as well. I don't know why these Bitcoin maximalists are pretending that there is going to be no Bitcoin cycle, like we're not going to hit a bear market, we're not going to go back below $100,000. I don't get it. I don't get it. And these are the indicators for me that we're approaching kind of the end stage, at least for Bitcoin, at least for this time period. Let's continue listening in.
Mining over the past 4 to 5 years. So if this is not an indication that hyper-Bitcoinization is coming, I'm not really sure what is. But countries that have excess energy, they can tap into that now and convert that into money and use that money for financing lots of different things. I believe we're also on the verge of countries issuing debt, sovereign debt, to buy Bitcoin. So the Bitcoin bond program, it is going to come simply because the MicroStrategy model has illustrated that this works, and it works very well.
So far. So far. Let's just be really clear. The Bitcoin bond strategy, I think El Salvador was going to try it out. From my understanding, it didn't work out as the way that they thought it was going to work out. And the idea that like all of a sudden these countries can start mining Bitcoin and taking out profit, like this is a brand new thing that just occurred within the last couple of months. This is ridiculous. Guys, this has been going on for years. And so this idea that countries are going to wake up and say, oh, wow, let's just start mining Bitcoin. That is the greatest thing in the world. Guys, they've been researching and looking into crypto for years. Some countries have moved into it. Some countries and most countries and companies, they're like, this is too small of a market for us to even worry about right now. And so a lot of this is going to take time. But a lot of the Bitcoin maxis are saying, whoa, look at this. Coinbase CEO is saying the US government will own over 600 billion in Bitcoin reserves. Guys, not yet. There's no time frame to this. It's not like the Coinbase CEO said they're going to have $600 billion in Bitcoin in the next few days. I mean, the US in aggregate already has over 600 billion in Bitcoin. I mean, just take all the Bitcoin ETFs, MicroStrategy, all the Bitcoin treasury plays. These are all US based companies. And so it's keeping the Bitcoin in the US economy, in the US markets. Right? So whether the government holds it directly or not, I mean, I don't know why people would be cheering that on anyway. The government shouldn't be holding money, right? They should be making sure that whatever money they do have is being spent to make people's lives better in the country, right? Not just holding Bitcoin for like some future thing. Again, where's the gold? Where's the gold audit? Anyway, and just to kind of show you the counter argument, because again, most of my viewers get it. Right, you guys get it doesn't matter whether we're at 110, 120, 130,000. We're close to the top of the market, right? Are we going to go to 400,000? I don't see the pathway there, because we know there's clearly liquidity in the market, because all the buying that's going on, that we know is going on, is being fulfilled on the other end by sellers. So this idea that we're going to go to $400,000 just overnight by them buying Bitcoin, it's like Michael Saylor. He has 500,000 Bitcoin, and it is a lot of Bitcoin. I'm not saying it's not, but there's 19 million Bitcoin in existence. And so this idea that he's going to eat up all the supply, I mean, guys, it's not going to happen. And by the way, this is the first real full cycle that we're seeing the debt issuance from MicroStrategy at the level that they're doing it. And we don't know how what this is going to play out. And by the way, people are saying, well, Cryptoviser, why are you paying so much attention to MicroStrategy? Because they are the risk in this cycle. This guy, Toby, on X, he is co-host of a blockchain chick, Crypto Tips podcast, I guess. Anyway, he said on X, people don't like that I'm saying we are not going to hit $1 million Bitcoin this cycle. There are going to be a lot of wrecked people the next bear market, and they are going to sell their coins to him and a few others who understand profit taking is wise. Yeah, I would completely agree with Toby on this, because people are going to get wrecked for sure. People who are buying right now, and this includes the Bitcoin treasury companies. I've talked about Anthony Pompliano, his company ProCap, which is going to be a SPAC merger. They're buying Bitcoin at $110,000. Like, what? Like, he knows what the Bitcoin cycle is. I understand the strategy of acquiring Bitcoin and the long-term thesis on it. But if you're going to raise money now, we are so close to the bear market. Why are you not waiting? Like, Guys, I don't get it. I don't get it. And there are going to be definitely companies that cannot that are not going to make it through the bear market. 100%, we're going to see at least one company, probably many. And then you know what's going to happen? Michael Saylor is going to buy the Bitcoin directly from them at a massive, massive discount, right, to where we are and to what they paid. They may have paid 110,000. If they go into bankruptcy proceedings, Michael Saylor can come in and say, "We're going to buy these at the current price, which is $50,000 or whatever the price is." I'm just throwing a number out there. And he's going to get those coins for a discount, and everybody who invested in those public companies are going to be wiped out. That's at the stock market level, right? People who are actually just buying in their spot portfolios, it's going to take years to get back to these levels, right? If you can withstand that, great. Michael Saylor can definitely withstand years of downtrending markets. Most of you cannot. And that is why it is important to actually take profits and understand the $1 million Bitcoin is not, I don't even think 200,000 is going to happen because there's too many people anticipating it is going to happen. And it's like everybody's just going to walk to the exchange very calmly. Everyone's going to go on Coinbase and Binance and Kraken, everybody at the same exact time. And we're going to just very orderly sell our crypto, and we're not going to see any of the price go down until once we're done all selling our crypto on the same day at the same time, then the price can go down into a bear market. It's going to be a very orderly thing. No, guys, that's exactly not what is going to happen. The smart money is selling their coins right now, period. I mean, anybody who says, no, Cryptoviser, there's no selling, that is literally, you have no understanding of the market if you think that nobody is selling. Like you should not be in the market, period. Like any markets, because you don't understand what's going on here. There's obviously selling going on. If Michael Saylor and all of these other companies and countries and people that were promised, oh, they're going to be putting their entire treasury into Bitcoin. They're not doing it, number one. Number two, clearly there's people on the other end selling. Otherwise, the price would have already been at $1 million. This is how supply demand works. So, yeah, I mean, it's not me. Toby said this. And by the way, I want you guys to keep this in mind because I'm getting a lot of people saying, Cryptoviser, why would anybody be selling at $100,000? It's like, because they're in massive, massive profit. I mean, even if you just bought at the cycle low for this cycle, which was 15,500 when FTX went down, even if you just bought then, you're up 8 or 9x just from the cycle low. And so that is a good return in any market, let alone crypto. And so Toby also posted this. He said, imagine buying 7 Bitcoin for under $800. I was going through some of my records, he says, and found purchases from March of 2013. This was done on Coinbase with zero KYC. There were some of the most memorable moments in crypto. And so, 7 Bitcoin he bought for $771. And now it's worth almost $900,000, right? About $800,000. No, it's between $800,000 and $900,000 from $700. That is the trade, right? Long term. You also have to realize, like, we're going to see, and we are seeing diminishing returns in Bitcoin. These kind of returns you're not going to see. It's going to take longer and longer to get these returns because this was at the very beginning of crypto, before anybody was really involved, before anybody was actually investing, before people believed in it. So that's important to take into context where you're going to say, well, Cryptoviser, why would somebody be selling their Bitcoin? I mean, we just saw 80,000 Bitcoin unlocked from Genesis wallets recently, 80,000 Bitcoin. And people are, oh, no, they're not selling. They're just showing you they have access to the coins. It's like, no, they're selling the coins. That's why they're moving them. And if people are like, but Cryptoviser, I mean, why would they want to sell? We're going to go to $200,000. It's like they literally got the coins for basically nothing, for free. And now it's worth each $100,000. So 80,000 Bitcoin is $8 billion. So if you have somebody on the other end, right, you got $8 billion in your pocket, but you haven't taken it out of your pocket, taken it out of your bank account, you haven't made it real yet. And somebody on the other end, like Michael Saylor, is saying, we're going to buy $8 billion in Bitcoin. And we're going to take out debt. We're going to dilute shareholders. We're going to keep buying no matter what. Why would you not take that money? $8 billion. Because honestly, it's not even a conversation about greed at that point. I mean, once you get past $1 billion, like what more could you possibly want? Like, for real. What more could you possibly want? So yeah, people are definitely selling. Anyway, it brings me right back to this, right? This tweet that we saw the other day, which is, says an entire generation is currently studying for jobs that will not exist. Think about that. This is one of like the hardest hitting tweets ever because this is totally true. People are putting their time, money, effort, energy into studying for jobs that won't exist. Whether it's now, 5 years, 6 years, 7 years, it doesn't matter. They're going away. And this is the same thing with the investing world, right? There's people right now investing in Bitcoin at $112,000, $117,000, believing that we're going to hit $1 million in the next 3 months and they're going to be rich and can retire. It's not happening. And they're going to be wrecked, because this time may be different because Wall Street is involved. But that doesn't mean that the 4-year cycle is not a 4-year cycle. I mean, I literally see Bitcoin maximalists saying this cycle is different. We're never going to go into a bear market again. And it's like, what? What? You guys get it. I mean, you definitely get it if you watch my videos on a regular basis. And if you don't, why are you not subscribed to the channel? Also give the video a free thumbs up because, again, we upload every single day to bring you the latest happening in the financial world. And this is another example, right? The SEC's halt of ETF holdings for XRP and Solana has investors suffering harm, according to Grayscale. Well. Grayscale has challenged the SEC's move to pause the debut of ETFs that hold Bitcoin, Ether, Solana, XRP, and Cardano, alleging that its investors are suffering harm as a result of the holdup. Grayscale said that it may file a petition to force the regulator to allow its funds to begin trading as soon as possible. Why do you think they're doing this at this point in the cycle? Because they know if they want this ETF to get inflows of money, they need to do it now when there is money flowing into crypto. Because I'm not saying crypto's going away. I'm not saying crypto's going down forever, right? But we are at this point where we're at the end stages of the bull market based on the 4-year cycle, based on the halving tracker, based on days since the halving, based on previous cycles. We've covered this extensively. And so this is the final pump. This is the final push where, the money is flowing in. Because here's the deal, guys. If the Federal Reserve doesn't lower rates, it's bad. If the Federal Reserve does lower rates, it's also bad because that just means that you can get debt cheaper and people are going to take out more debt. Or companies or countries, they're going to take out more debt. The more debt you take out, the more money you're effectively creating. If that money is just flowing into cryptos, it's just hyperinflating a bubble that's already at the top. And so there's going to be a deflation of that bubble at some point, right? The higher we go, the closer we are. The higher we go, the more risk there is. The higher we go, the more likely the downside risk is even more, right? If we get to 200,000, I want you guys to think about who's buying at $200,000 when we have no correction. If we just go straight up to 200 or 250 or 300,000, who's buying at those levels? You may say, well, Michael Saylor is. Yeah, but he's one individual. And by the way, if debt becomes cheaper, right, the percentage yield, then less people want to buy the debt. And that's what they're doing with MicroStrategy. And so there's just a lot of risk here that I think that is being kind of pushed off. And this is, I think, Grayscale kind of letting you know as well, another signal. They want to hurry this up because if they don't get the timing right, the money stops flowing into this ecosystem, right? Just think about like AI. Everybody's kind of halted on AI investments until they kind of figure out how AI companies are going to make money. But once they start going in that direction, the narrative is going to shift back into AI, and then you're going to see a lot of money pumping into AI. But right now, it's not. Same thing can happen with crypto, and that's important to keep in mind. Meanwhile, we're also now hearing other companies are moving away from Bitcoin, and this is another indicator, right? The transition is happening. I don't think these companies are going to transition away from Bitcoin and then back to Bitcoin within a year. And so this transition these companies are making away from Bitcoin into altcoins takes away, the number one, it takes away the focus on Bitcoin. Number two, it creates more risk for the other companies involved. because many of these companies that are changing, like Bit Digital or this company Bit Mining, which we're about to talk about, they're changing from Bitcoin to Ethereum, Bitcoin to Solana. That could tell you that their Bitcoin business was not working or wouldn't work as well in a bear market as Solana Treasury or Ethereum Treasury and a pivot to Ethereum. Because remember, Ethereum, you earn a yield through staking. Bitcoin, there's no yield. So you're just hoping on the price appreciation of to make the value go up. And so these concepts are really important to understand because these companies moving away from Bitcoin, to me, says they understand where we are in the cycle and they want to get out before everybody else does. Because once the decline begins, right, whenever that happens, I don't know when it's going to happen or how it's going to happen or what, but there's going to be catalysts that are going to create the downtrend. And once that downtrend begins, it's going to be very hard for people to exit because everybody's going to want to exit at the same time. That's why you have to sell into the liquidity that's coming in. Again, they see Michael Saylor is still buying. They want these ETFs pushed out quick. Anyway, crypto mining company Bit Mining pivots to Solana with a plan to raise $300 million for their Solana treasury. Now, I don't necessarily like the whole Solana game here because, again, it's just a wealth transfer to the billionaires who've been investing in Solana for years. Anyway, New York Stock Exchange listed crypto mining company Bit Mining announced a strategic shift into Solana and plans to raise 200 to 300 million to accumulate in phases. They said this transition positions Bit Mining to capture emerging opportunities across a broader blockchain value chain, while also establishing itself as a publicly traded vehicle for investors seeking exposure to this Solana ecosystem. To kick off the strategy, Bit Mining said it's going to convert all their existing crypto into Solana and adopt a long-term holding strategy. And so again, this is just another company that's converting all their Bitcoin and they're selling it. Maybe they're selling it to MicroStrategy, that's fine. But the bottom line is they're exiting. They are exiting. And so this idea nobody's selling Bitcoin, I mean, it's right here. It's right in front of your face. Anyway, I don't know too much about this company. It's not I don't think it's a US-based company. I tried to pull up their SEC filings, but it doesn't actually show anything recently. It shows the last time they had an SEC filing was in 2023. So I think it's more just not a U.S.-based company. That's why we're not seeing it. But they also look at their finances, right? In 2024, which is their most recent yearly results. I don't know why this is not pulling up. You can see here they made $32 million, and their EBITDA, right? What they made afterwards was $2.3 million. The year before they lost $4 million. The year before they made a few $100,000, and the year before that they lost money. And so maybe this Solana treasury strategy, because again, you can also earn yield on Solana staking as well. So we'll have to see how that plays out. Anyway, moving on to Ethereum. Guys, the focus right now is Ethereum. I think that Ethereum going forward in this cycle, in the end of 2025, maybe even early 2026, I think the play is not Bitcoin anymore. I think that play is exhausted, at least for now. What I'm kind of anticipating is we're going to see a big push in Ethereum, maybe a little bit of a drain or sideways trading in Bitcoin. And then when profit taking begins, which it probably already has, but I'm talking about higher levels than where we are, because we're still at pretty much multi-year lows. Or I should say all-time not highs, right? We're not at the all-time record highs or even close to that. And we haven't even passed it. And we may not pass it. But here's the deal. Once profit taking does take place, right, the shift moves to Ethereum, Ethereum-based coins, I think that there's going to be profit taking and then a reallocation into Bitcoin. And probably by that point, Bitcoin will be a little bit lower. And that will probably be the final pump. These can happen very rapidly, right? Over the course of days, over the course of weeks, or over the course of months. But we have to understand where the narrative is shifting. And it is shifting towards Ethereum. And a lot of that is going to be based on these Ethereum strategy companies or the companies that are starting to acquire Ethereum. Because there is a play here, which Tom Lee's going to explain here, which is why he's chairman of the board of another company that basically transitioned completely to Ethereum. I think it was called Bitmine Immersion Technologies. They also 10x'd their stock price since that change. But they're kind of betting on the fact that banks are going to start using Ethereum and Ethereum's infrastructure. And so this is front running the banks, the same way that Michael Saylor was front running Wall Street. Well, the front running of Wall Street is over because now Wall Street's involved in Bitcoin. But with Ethereum, the banks aren't fully in yet. And so this is an opportunity to front run the banks, which rarely happens in the markets. Let's listen to what he says.
To me, is really going to be where Wall Street meets crypto, because that's where you're tokenizing and it's using smart contracts. And so I think the usefulness of Ethereum grows as Wall Street sort of moves into crypto.
The IO of Fundstrat Capital and chairman of Bitmine Immersion Tech.
Become an Ethereum treasury strategy.
Now, it's going to be very hard to play this whole thing because of the music, but effectively, you heard what he said about the banks are involved and he wants to front run that.
ETF.
When someone buys an Ethereum ETF, they're buying a single unit of Ethereum. And for as long as they hold that ETF, that amount of quantity of Ethereum is going to be basically fixed. Whereas an Ethereum treasury stock actually has a lot more optionality to increase the Ethereum held per share.
And what he's saying here is the ETH ETFs just track the price of ETH, but these Ethereum treasury companies, similar to MicroStrategy, they can trade at a premium or at a discount. This is, to me, it's very similar to the Grayscale play in the previous cycle. If you guys have been following my videos, you know that back in 2020, I was heavily trading Grayscale products. I would say more than crypto itself, because there was the premium and the discount to the NAV, or the MNAV, which is the net asset value. So for instance, if they hold $1 billion in Ethereum, and their market cap, and that's all they do, right? And their market cap is $2 billion. Well, their market cap is double what they hold in Ethereum or whatever crypto it is. And so their MNAV is 2x, right? It's 2. If they had $1 billion of Ethereum or whatever other crypto and their market cap was $1 billion, their MNAV is 1, right? It's 1 to 1. So that's important to understand. Like, these stocks that hold the crypto could be valued more than what the crypto is worth, or less. And that is the same play that we saw in the previous cycle with Grayscale products, because Grayscale products were not ETFs, so they didn't trade at the NAV. And so a lot of times we would see them trading at discounts, buy, and then when it would trade at the premium, we would sell. And sometimes those swings would happen, the underlying crypto would go up, let's say 2x, and the stock would go up 4 or 5x. And that is the play here. Again, MicroStrategy was on this play for a while, and their MNAV is very high. It's about 1.8, meaning the stock is almost 2 times what the underlying Bitcoin is. Now, these Ethereum strategy companies, they're basically at MNAV right now. And I believe personally, once like Ethereum starts moving, right? Let's say Ethereum does go to 10,000, like most people are anticipating. I personally don't think it's going to, but let's say it goes to 10,000. That's basically a 3x from where we are today. So if these stock companies that are buying, or ETH treasury companies are buying Ethereum at $3,000 or below, and we go to $10,000, those stocks theoretically are going to at least 3x, if not more, but most likely more. Because again, there's access on the capital markets to these stocks, and they're not trading based on the underlying asset. They're trading on potential future earnings. That's something to keep in mind, because remember, the markets price things in ahead of time. And so that's something to keep in mind. And by the way, if you're up to this point in the video, don't forget to give the video a free thumbs up and let me know. Cryptoviser, I'm up to that part in the video, because, sometimes I don't know how long you guys actually watch these videos for. And so, yeah. Anyway, moving right along, where were we? We were right here listening to Tom Lee. They had music in the background, so it's kind of hard to play. But yeah, you can see here on Strategic ETH Reserve website, you can see that SharpLink, which is the consensus kind of ETH treasury company, they're about to surpass Ethereum Foundation in terms of how much Ethereum they hold. And then obviously you see not a lot of companies actually hold any Ethereum. And the ones that do, it's really not that much, right? Bit Digital holds 100,000. This is the company that just went from Bitcoin mining into Ethereum. And that's pretty much it. So there's a very low bar and this bar is being raised as we speak, but it's going to continue to rise in terms of how much these companies are actually holding. And I think that similar to what we were talking about at the beginning of the video with Grayscale kind of pushing for these ETFs to get approved, we're going to see a mad rush into Ethereum treasury companies to do what Tom Lee is talking about, right? Front run the banks, front run them having to utilize crypto and hold crypto and buy crypto. And so I think the mania in altcoins and Ethereum is picking up. And it's not just me saying this. Crypto Founder pushes Ethereum as the world reserve asset. So we know founder of Mythos Capital, also Bankless, he's on Bankless, took to X to highlight the strategic evolution of Ethereum's positioning. He said, the Ethereum community has executed blue money gospel marvelously over the past 2 months, referring to the earlier thesis of Ethereum as a global productive asset. This renewed narrative focused on Ethereum as a yield generating store of value asset backed by active economy appears to be resonating with institutional and retail investors alike. And by the way, this narrative hasn't just started, but now they're picking it up because again, in my view, the Bitcoin trade is kind of done, right? This is non-productive finance or assets, right? You're just hoping the price of the asset goes up relative to the price of fiat. And while that thesis is great and all, right, it doesn't make you any money. Michael Saylor has made $0 for MicroStrategy through their Bitcoin holdings. $0. People say, no, Cryptoviser, he made $30 billion. He's the best trader in the world. He never realized any of that. So none of that is actually theirs, right? All he's created, he's made a lot of money selling his stock. Personally, he sold the stock. The executives are selling their stock because the trade is Bitcoin, not MicroStrategy. But either way, with Ethereum, Solana, a lot of these other cryptos, you can earn yield through staking. There are active economies, right? This whole idea of Bitcoin for payments, it's a failed model, right? Nobody's using Bitcoin for payments. And you may say, well, they're not using it yet. No. They're never going to use it for payments. They're using Ethereum layer 2s like Polygon and more, right? And that brings us to some other conversations. We are going to be talking about Polygon in just a minute, but before we go there, keep in mind Fidelity just put out a research report and they're valuing Ethereum as money, the valuation model for blockchain's GDP. And again, Ethereum has an active economy. Bitcoin doesn't. A recent report by Fidelity Investments proposes valuing blockchains on the basis of GDP, saying it's more appropriate to compare decentralized blockchains to sovereign nations and their economies, rather than Web 2 companies or products, because they're embedded in crypto. So this is the formula they use. Fidelity uses Ethereum as an example. So when you transpose the GDP formula onto Ethereum blockchain, you can see what it looks like here. You can pause the video. We're not going to go through all of that in today's video. It's quite a bit. But yeah, remember what we've been talking about, right? These financial firms are starting to think about crypto differently, not just looking at market cap. They're also looking at fundamentals. They're looking at things like this, like valuing it as money compared to the GDP. And so there's a lot of conversation about where crypto really lies and what crypto really is and which has, the best outcomes. I think a lot of people are getting to the point where, we're seeing a lot of comments on the channel and social media about, decentralization. People will say, well, this crypto is not decentralized. This crypto is not decentralized. Like, guys, none of these cryptos are truly decentralized in any possible way. They just can't be. And we've seen many examples of this. One is Ethereum, right? I'm going to let you guys listen to this because they basically talk about the fact that if it is a decentralized ecosystem, and this is what Vitalik wanted, is this what Ethereum has created, right? And this is a good question, and this is going to bring us into Polygon, and also a little bit about Internet Computer, and really all the cryptos. Because once you don't have a leader driving the narrative, driving the technology forward, it kind of collapses. I mean, if you really think about the cryptos that are succeeding in true integration with traditional finance, true integration with DeFi, interoperability, etc., think about Chainlink. Chainlink is supposedly a decentralized protocol, and it is a decentralized protocol, but it's still controlled by a centralized entity. And all these chains will be, including Bitcoin. Michael Saylor, he has a lot of power in Bitcoin. He can put all his crypto on the market tomorrow. The price would go down so quick, so fast. It would be unbelievable. So there is centralized entities, the Bitcoin mining companies. Most of the Bitcoin mining is now centralized in the United States. So you could say that it is basically controlled, right? And so that's something to keep in mind. Let's listen here to what they were talking about. I don't know. This was some Ethereum. I think the Ethereum conference that happened in France just recently. And so let's listen. This is Danny Ryan, who is, I don't know, some Ethereum person. That's Joe Lubin, and that's David from Bankless. Let's listen in.
I don't want to, speak badly about Vitalik. He is the reason why crypto has so much of the ethos that it has today, and I think we owe him just lifetimes of debt for how he has stewarded not just Ethereum but crypto in general. And also, to some degree, he has passed on the leadership to people like Tomasz and Xiaowei, but nonetheless, he still occupies the top seat and also loves to not actually take direct control over the reins. So he's in the leadership position without taking on like an operational excellence role inside of the Ethereum ecosystem. And in my mind, that's one of the reasons why it has taken so long to turn this big ship around. Danny, that's my take. I'm wondering if I can get your reflection.
Yeah, and so what he's talking about here is this idea that if you truly create a decentralized ecosystem where there is no leader, everything kind of falls apart because there's so many differing views. There's so many differing wants and needs that you need, effectively you need a leader. This idea that you could have a leaderless ecosystem, I don't think that it's valid. And I don't think that even if it's a truly decentralized ecosystem, it doesn't matter. You can still have, leadership voices kind of pushing and guiding the growth of the ecosystem. Otherwise, like think about if Michael Saylor wasn't around, would we be where we are in terms of market cap of Bitcoin, in terms of adoption of Bitcoin, in terms of, countries adopting the usage of Bitcoin, companies adopting Bitcoin, Ethereum, etc.? Probably not. Right. So in a way, Michael Saylor is the Bitcoin, a leader in the Bitcoin space, right? Maybe not fully on the exact ecosystem. If you think about another ecosystem like XRP, right? Brad Garlinghouse could be viewed as the leader. But if you really think about what Brad Garlinghouse has said about XRP and versus Ripple, it's really more focused on Ripple versus XRP. We haven't really heard too much from Brad about how XRP ecosystem is going to grow. And therefore, the XRP ecosystem hasn't really grown, right? We haven't seen that much interoperability, that much smart contract or AI implementations. And that's kind of where the whole technology field is going. If you think about Cardano, most people, when they think about Cardano, they think about Charles Hoskinson, right? But Charles has been taken a step back in the recent years, not fully, right? But he's not really, it seems like he kind of stepped back and was like, you guys, let the community kind of figure things out. And where has that led it? Still no USDC, still very little interoperability, not much institutional interest at all. And so maybe if Charles didn't step back, maybe it would be different. Maybe not. I don't know. But I'm just kind of giving you guys examples. Another perfect example, and then I'm going to let you guys listen to Danny Ryan's point, because this is going to tie it all together, is we saw the same thing happen with Polygon just recently. Think about Ethereum Foundation. Vitalik had to go in and kind of shake up the Ethereum Foundation and the leadership there. He didn't want to do that, it seemed. Like, that's why he didn't do it. But the community kind of said, like, Vitalik, you need to get in there and do something because we need the ETH train rolling, right? And the same thing happened with Polygon, right? Sandeep, he wrote just a few months ago, this was in June. He is the founder of Polygon. He said, as the largest holder of Polygon and someone who dedicated his life to the development and success of Polygon from the very beginning, I've decided to take full control of the Polygon Foundation and will be its CEO going forward. Polygon Foundation owns and oversees multiple entities, including the major contributors, Polygon Labs, which will continue to be led by that person as the CEO, who in his mind is the best to execute in the crypto industry. But this just goes to show you, right? Polygon, after their rebrand from Matic to Paul, we've seen the price has gone down pretty substantially. But the thing is, Polygon's ecosystem, this is where they're going for payments, right? Everybody was telling us years ago, Bitcoin is going to be for payments. We're going to have El Salvador accepting Bitcoin. Nobody's using it there, right? Or very few people are using Bitcoin for actual payments there. They still prefer the dollar, which is fine. But it kind of goes to show you, like, Bitcoin, it's not the premier asset for payments. Polygon, on the other hand, it is. And they've already implemented this kind of capabilities and technology. But does anybody actually know this? Well, I think the answer is people are getting to know it, but I don't think that Polygon has done a very good job with branding and marketing what the chain is doing and capable of, and all the integrations and back-end operations that we already have on Polygon. And so clearly the Polygon ecosystem thought the same thing. And if you think about it, right, besides Sandeep, there wasn't really somebody out there like pushing for like marketing the ecosystem and for what it is. And you need to have a figure of some sort kind of driving the message. There could be multiple figures. There could be multiple leaders. Maybe one is pushing the AI narrative. Maybe one is pushing payments narrative. Maybe one is pushing interoperability, right? It could just be maybe ecosystem developers. We see that in Ethereum a lot, where ecosystem developers will kind of put their opinion out and receive feedback and then go and develop tools and products for the chain that way. And so I don't think it really matters personally whether a chain is truly decentralized or not, for multiple reasons. One, do you want the technology or do you not want the technology? That's a question you got to ask. Because if you want the technology, it needs to start centralized. Over time, it can become more decentralized, as we've seen with Bitcoin and Ethereum, but it could also be captured again and re-centralized, right? And so we have to understand, like, true decentralization, I don't know will ever fully exist the way that purists and maximalists may want, but it doesn't matter. Do you want to make money or do you not want to make money? Do you want the technology or do you not want the technology? Personally, I want the technology and I want to make money, right? And so once the technology is created and then implemented and then used on multiple different chains, you could have different iterations of that technology. And that helps, the competition helps advance the technology and make it better and more efficient. And so that's kind of the way that I look at it. And so I don't know that we're truly ever going to have a decentralized ecosystem in crypto. And people who say that, yeah, it's decentralized, well, not when you have one entity like Michael Saylor's MicroStrategy buying up 600,000 Bitcoin, all with debt. That's not decentralized, right? And I'm not saying it's a bad thing. I'm just saying it's not decentralized. All of the hash power that the US has in publicly traded companies that are easily influenced by shareholders, the government, the regulators, etc., that's a form of centralization. And so that's just the evolution of this technology. I think that moving into DeFi, where people have more options and choices and access, versus banks that are just trying to squeeze you for everything that you have, especially when you're poor, I think it's worth the maybe lack of decentralization to have a truly a system that is open to all and anybody can have access to. There's a lot of people in the world that still don't have access to traditional banks, right? And so listen to what Danny Ryan says about this whole conversation of decentralization and, leadership figures in the space and all that. Let's listen in.
Or thoughts or anything you'd like to add?
Yeah, so Vitalik's personality is such that, owning, controlling, manipulating from a high level this thing is not what he wants to do. But from a strategic standpoint, I think he recognized early on that that's not how you build towards a resilient infrastructure, a resilient ecosystem. And so he's very purposefully not controlled this thing. And only over the years does he chime in with philosophy, potential direction, and only very rarely does he say, this is definitely what should happen. He still has certainly like very high level of kind of respect in that when he does utilize that component of his voice, it is listened to. But that's just not what we're going to get out of Vitalik. And that's not honestly what we need from Vitalik. And I joined up with Vivek earlier this year to co-found Etherealize. And one of the things that I wanted to do is just to show that the Ethereum Foundation only does so much. They have boundaries as to like what they operate in, what types of things they're going to engage in. And then there's this whole ring of activity that we all should be doing. We all should be accomplishing, whether that's through companies, foundations, grants, et cetera. So one of the things that we want to do in Etherealize is operate in part of this ring where otherwise there was just kind of a vacuum. Like, yes, let's go show up and onboard Wall Street. Yes, let's go talk to the government, because Vitalik's not going to do that. That's not what very early on he decided was the ethos of the sphere of control that he nor the foundation should have. And because of that, I think we have a much more resilient thing. But because of that, we also have, I think we had this window of time where there ends up being, the sphere of activity the Ethereum ecosystem should be engaged in and accomplishing in, but is kind of this chilling effect because Vitalik does exist, because the Ethereum Foundation does exist. There's this whole host of activity where it's like, well, somebody else will probably do it. It's like, no, we need to step in and make sure this stuff happens.
Yes, bingo. I think that's a big thing, especially why I'm so nervous about where we are in the cycle from a top standpoint, is because the people investing now, not Wall Street, right, but other people investing, I mean, maybe even some Wall Street, they're investing in the hype, right? But all of the things that were being promised, right, more implementation and TradFi integration and AI capabilities and smart contract usage and on-chain lending and all of these things, they have to be built out. And there's very few companies that are actually building on blockchain rails, right? And what we're seeing is a lot of these companies, they end up going into incubator programs or accelerator programs from Consensus or Coinbase or any of these other programs to help kind of push things forward. But if you think about like what crypto was doing just a few years ago, everybody was kind of like, they didn't want to do too much because of all the regulatory hurdles, right? And now they're looking and saying, no, like we should have been doing this. And by the way, the crypto industry lobbying efforts, I think, brought us to where we are. Because if you remember, the president in the previous tenure, Trump said that Bitcoin and crypto is a scam, right? And now he loves it. And so a lot of that, I think, has to do with education and lobbying. But again, if everybody is like, oh, they'll do it. It's like, no. Coinbase had to literally be forced to do it and put all this money into lobbying because they were being sued by the SEC over and over and over. So they didn't have a choice. But even Coinbase was like, oh, somebody else will do it. Somebody else will do the lobbying. Well, we'll worry about that later on. Oh, they'll come around to crypto. It's like, no. Crypto had to get together, create these, these educational campaigns for these, candidates, and do stuff. And the same thing is in crypto, right? A lot of people in crypto are investing in the crypto, and then they're just holding the coin and thinking, oh, those people will make me rich. It's like, no. The only person that's going to make you rich is you. And these founders, they're already rich. Like they don't need to get richer. And so they're creating things, all these ecosystems. The founders are creating things and they're working on projects on their own, maybe not public projects, right, that you know about or that you can invest in, but they are definitely investing in it. And it's going to benefit them. It's not going to benefit you. You need to build and create if you want to benefit yourself. That's the thing we talk about on this channel, like creating your own investment portfolio, your own investment thesis, your own investment strategy, managing your own money. There's still a lot of people who don't even manage their own money. They'll call their broker and say, hey, invest in this, invest in this. The broker doesn't care. The broker's not going to make you money. You need to make you money. You need to invest in the right things. You need to do the research. And so that kind of brings us to where we are, right? Where Ethereum, the ecosystem, is building their own leadership conversations. And when we think about Ethereum, yes, you sometimes think about Vitalik, but you also think about all the technology that is being built on it. When I think about Polygon, I think about all the micropayments that are being accomplished, not on Bitcoin, on Polygon. And so these things are being done. They just need to let more people know. And sometimes it does take a leader to kind of push those messages out. Like Sandeep said from Polygon, Polygon enables institutional grade payment rails with low fees, fast settlement, and infrastructure already supporting billions in stablecoin flows. And the June numbers are looking good. Micropayments, which are 50 cents to $100, reach all-time highs, crossing $100 million in monthly Polygon volume. And you can see more is being transacted on Polygon than any other ecosystem, including Ethereum. Polygon holds 52% of micropayment market share, more than Ethereum, Solana, Base, Arbitrum, Optimism, Avalanche, and Gnosis combined. But people will say, but Cryptoviser, Solana. Solana what? Solana's not even on this list. And Polygon has more than Solana, Base, Arbitrum, Optimism, Avalanche combined. Anyway, he also said, we also grew 37% in small payments, which are $100 to $1,000, while other chains declined. And do you know why most of this is going on Polygon? Because it's back-end integrated, right? Because people who want to use DeFi want fast, cheap, and more efficient DeFi. So they're going to use Polygon versus using Ethereum. I just told you guys the other day about a bank that tokenized a bond on Polygon, 100 million euros. Not a word from anybody in crypto. It's like nobody wants to talk about it. Nobody wants to celebrate that. I mean, that's pretty unbelievable in my view. Polygon has a 42% of small payment market share, and we're only getting, I guess I meant started. Don't fade the purple chain. And a lot of people have faded the purple chain. They have said Polygon is not worth it. Polygon is, guys, I want you to see the market cap of Polygon, okay? And I want you to understand, right? 2.3 billion. If you include Matic, it's about $2.5 billion. $2.5 billion. PP Coin is double the market cap of Polygon. No payments, no stable coins, no interoperability, okay? Ton Coin, which just promised people that they're going to be able to get a Dubai visa or a UAE visa if they stake their Ton Coin, and then the government in UAE said, no, we're not involved in this. They are worth 3 times the valuation of Polygon. Shiba Inu coin is worth 3 times as much as Polygon. Unused Leo, which nobody even knows what the F this is more than 3 times the valuation of Polygon. And so Polygon should be way higher, but it's not. Why? Well, some of it probably has to do with the fact that as they've been pumping their back-end integrations, they haven't been marketing that. They haven't been talking about it. And so it kind of got faded. But the fundamentals, in my view, are where the ecosystem is moving towards. That's why Bitcoin, that trade is exhausted. And so, yeah, this cycle is different. Ethereum as a reserve currency, that's possible. But I think first it's going to be a major investment, and not just Ethereum, but the layer 2s like Polygon. And also internet computer. We've been talking about, people have been getting ready for the AI push. Addresses holding over 100,000 Internet Computer Protocol coins, known as humpback whales, have pushed holdings to a new all-time high of 409 million ICP. And so humpback whales, 100,000 ICP. The current price of ICP is about $5, $5.50 maybe. Yeah, $5.20. So you do the math on that. That's 100,000 times 5, $500,000, right? That's a humpback whale in Internet Computer. And we're about to see the rollout of major subnet changes on the network, major AI implementation on the network, the self-writing internet, as we've heard before. And so there's a lot happening in these ecosystems outside of Bitcoin, outside of Ethereum. And it all comes back to the fundamentals of the chain, right? This is what Wall Street is looking at. Bitcoin does have fundamentals. I just think that we're a little bit bubbly in the cycle right now for Bitcoin. But we also know that Wall Street, the governments, they're looking at crypto. But there's very, very high expectations for the crypto ecosystem. And we've gone up very, very ridiculously in many of these cryptos. And the trade this cycle, like I've said many times, may be these treasury companies versus the actual crypto, for the reasons Tom Lee explained earlier in the video, where he said, because you're not trading at MNAV all the time on these Bitcoin treasury companies like an ETF, there's the possibility that they can run up higher than the underlying asset, and also they can drop harder than the underlying asset. That's important to keep in mind as well. Many of these treasury companies for Bitcoin, Ethereum, Solana, many of them have already 10x. Some of them have just announced they're going to be implementing their strategy and have the potential to 10x moving forward, and they may perform better than most of these cryptos out here. But it all comes down to the fundamentals, and the fundamentals are going to be what matters. And so we have to keep our eye on the fear and greed index, keep our eye on the hype that's in the ecosystem, but more importantly, the fundamental technology and capabilities of these blockchains. Are they ready for the future? We will find out as we move forward. Don't forget to give this video a thumbs up, hit that subscribe button, and I will see you when I see you. Crypto on.